Hi friends, this is lesson number 10 and we are going to discuss about company. So when you are structuring this company, of course you have a vision for this idea, you want to really make a scalable business idea, but company is something which is a core foundation of this whole idea. The kind of structure you are creating for your company, the authorized and paid capital which you are going to give to your company, the documents and records which is proven that something effort's been taken, and the board formation, because that's the higher authority of your company. You should know that how this company is functioning, what is that rules and regulations you need to follow. Because being an entrepreneur, our job is not only to really sell the product or services. Sales is important, gross profitability is important, but at the last, the most important thing which we want to really form a company, what is this company is all about? These four important things will help us to really understand and establish our core foundation. So let's understand from the core of the first foundation. You are incorporating company, you are giving a name to your company. The first step what you do, you take a pool of authorized capital, because you need to have a shares in your company, because in the company there is only one way to get money inside, by selling a shares. If you are three partners into the game, one may be having 40%, another is 30, another is 30. So at the first you decide that what kind of authorized capital you want in the company, what kind of a pool you want, because the kind of partners you have and the kind of money which is required in the company, based on that you decide that maybe X number of shares I require. Now at the rate of 10 rupees, if you bought 10,000 shares, by giving a fees of 5,000 rupees you can take up to 10,000 shares. Maximum 1 lakh rupees you can bring inside if you are calculating a value of your shares is 10 rupees, and at early stages, at initial, 10 rupees is the maximum fair value, because there is no business in the company, so you cannot increase and you cannot take a premium. Now here, since you have a 10,000 shares, you can maximum bring 1 lakh rupees in the company, not more than that. Your paid up capital cannot be more than your authorized capital. So authorized capital is more like your virtual pool of shares, and once you really buy that shares against the money, that convert into paid up capital. Second important stage, you need to know that your board of company is the highest authority of your company. The second important thing is your position in your company. You know that the board is the highest authority of your company. You have a multiple role to play here. One, you are a shareholder of your company. Being a promoter, because you are a highest stakeholder of the company, you have a responsibility to ensure that everything is running and functioning well. You have that all right to really keep an eye and check on every action. Second role you are taking as an executor, because you are part of management team. So you want to ensure that whatever been decided by the board of the company, management team is executing that plan and giving and turning into results for the board. Being a shareholder, you can take a multiple role, you can take a multiple position. You can be a direct director, because that is a director who is involved in the whole operation as well. There is an executive director who is also a director and as well part of the management team as well. And third is a non-executive director, that you may be involved in only a decision making, a part of board, but you are not involved in execution of your all this business. You are not directly involved, but only in the board you are a decision maker. In the non-executive director also there is two options, because you can bring any other director also on the board, even if it is not a shareholder of the company and he has nothing to do with your company. A non-executive director can be an independent or dependent director. One is someone who is having some engagement or involvement in the business, means he may be a stakeholder of your company or shareholder of your company, or maybe at least somewhere connected to your company. And one, those who are not at all having any connection, but still they can come on the board and contribute their all roles and responsibility. You should have your board rightly formed with the combination that you should have a shareholder, you should have a management team, and you should have a stakeholder. So all together can make a right combination of board, and board is the highest authority. You being a stakeholder or a shareholder or anyone who is working in the company is finally answerable to the board, and board is the final decision maker. So when you are forming your all this board, you have to ensure that the kind of agreements and terms you are agreeing for all your directors, executive directors or non-executive directors. Either you are giving a voting rights to them, either you are giving them kind of a terms and benefits on dividend. What kind of a benefits and terms you are going to define when you are bringing them on board. Please ensure that when you are giving them any position on the board, ensure they are going to contribute and adding some value and not going to be a challenge for you. Make a right board which is going to ensure that whatever plans you have, all collectively taking the right decisions. And you have to really make answerable to yourself, because if you are going wrong, someone has to be there to really put finger on it, and someone has to be there to encourage and motivate you. And the friends, when you are forming a companies, documentation is most important factor, because you have to record all that information. You have to be sure about that everything what you are filing, everything what you are drafting, everything what you are signing is going to make lot of decision making, lot of impact on your whole business. When you are founding your company, your MOA, your memorandum of association is the key important factor. It's a constitution of your company. Please ensure that you are reading it very carefully, talk to your CA, understand that the nature of business you want to do it, everything is properly captured here. Article of association, it is more like a law book of your company. Ensure that all the process systems, the kind of process and culture you want to give it to the company, it has been drafted. Let's not go with the generic option. Talk to your CA, give the vision about your business idea, what all rules and regulations you want to get inside, everything will be captured here. Make a right shareholding agreement. Everyone, those who are a part of your company, those who are carrying some kind of a shares, have a proper shareholding agreement. They should know that what role they are going to play there. They should know that what kind of a sharing holding they have, what kind of a terms and voting rights and other factors are been already clear with them. So they're agreeing, and having a signed document is going to make your life more easy. Key person agreement, someone who is very important people in your company, those who are maybe employee or maybe someone else as a chairman or as a consultant, have that key agreement with you. Co-founder agreement, you should have the defined kind of a roles and responsibility, and you should know that for what purpose you are bringing people on board. Have a proper agreement with the right rules and responsibility, with the right understanding of MOA, right understanding of your positioning, right understanding of deliveries. If you have everything precisely in writing, if you are keeping the transparency in a longer term, it is always good. Second is your process and actions. Please make a practice that every your efforts, what you are doing in business, you should capture that as assets with you. Make a minutes of meeting with each and every meeting which you are going through. It will really make a great impact, because anything which you are doing as a efforts, it will be filed with you, and that will in a longer term turn into asset for you. Key parameter index, have the proper KPI standard templates with you. Management information system means your MIS report. You should have your standard dashboard, and you should know that how to really find right key factors on daily basis. Workflow process, we have already discussed about it. Approval process flow, we have already discussed about it. Circular of modifications, any modifications you are doing in the company, make a proper circular, convey to the all right people, educate them, guide them. So what you are thinking as a management should reach to the last mile. And the company security documents. You should have a non-disclosure agreements. Wherever, anywhere you are sharing your company details, you should always keep some non-disclosure agreement terms in every agreement, and ensure that what you are sharing with them, it is remaining intact and not giving any kind of a challenges to you. Trademark agreement, if you are really serious about this all business, please apply for the trademark agreement. Business partner agreements, wherever, anywhere you are doing any kind of a business, have a practice that at least a small piece of paper or at least few templates to be get signed by them. So you will have something in records. The terms and conditions are going to be transparent with each other. Roles and responsibilities are transparent with each other. There will be no confusion. Employment agreement, have your all proper agreement drafts with you. Appointment letter, all the kind of documents which is required for employment as per the law, as per the labor law. Please follow it. Every time with the discipline, you have to conduct your proper board meetings, and every that meeting need to be captured and resolved. If that records are with you, and if it is got registered with your annual reports, you are making your own journey smooth, and you are securing your own actions and decisions as well. And the memorandum of understanding, you should have a templates with you. So these are the security side, because anything which you are working on, any actions you are taking, you have to respect your own actions, your own efforts, and convert that into for the great documents and records for you. That will become a referral for you and for your team also. So it is very important stage. Understand that documents and records are the key to really show what efforts you have been done. So friends, this is the final 10th POC we have. We have discussed all in detail. So we have understood the company corporation basics. We have understood why the board is required, how to really form your board, and your share structure and the documentation part. So friends, finally we have completed all the 10 lessons. We have structured all our stage by stage proof of concepts. If you print out all this in a right precise format, you will be getting all the precise information about your company and how you really want to take that journey towards your scalable business idea. Of course, you want to take that journey toward next, and that is your all right business blueprint, because you have understood that what great things which you have in your business. The next important stage is how you can really make your right funding blueprint, so you can get your investments, you can get all your resources and make your right final stages to achieve your all that blueprint, and you can really find all that right milestones to achieve with the help of your all plan. So with all this merit of your POCs, with your facts, you can really make your great funding blueprint, because you have all that understanding and logics with each and every point why this business is really a great business and how you can really take to the next level. To make your right blueprint, we are inviting you for this next course, which is funding blueprint. We are going to cover this all important factors in this blueprint, and from the perspective that how you can justify, how you can showcase, how can use all that your POCs and validations to make your great presentation so you can achieve your funding goals.